I'm Jared Johnson, and on this episode of the Stock Market Playbook, we've got Thor Young. And all I have to say is lean hog futures. Thor talks about one of his trades he took recently, today, I think, actually, and how it went and how his strategy kind of manages risk in the shorter term kind of day trading approach. We don't have a lot of day traders on here, so this is actually a really interesting episode, especially for those that are interested in day trading and already in that field. So I think you're going to love this episode. Thor and I have a great discussion around day trading and a good strategy and a good approach for it. So enjoy. All right, thanks Thor for joining us in the podcast today. We're excited to dive in. As we were chatting a little bit before, it sounds like you got some futures trades that you're interested in and doing, and so we can have a little peek at that. But for everyone that's kind of getting to know you a little bit here, give us a little intro. Tell us where you're from, how you got here.
Yeah, I can do that for sure. So first off, thanks for having me on. I really appreciate any chance to get out there and speak with people about trading. I have a what I consider to be a kind of a unique approach to trading. In a way, it's not quite the exciting hustle and bustle way of trading. I trade very statistically using a very well laid out system, and that's what we kind of try and push forward versus like kind of like the hype and all the like wild trading, the momentum, the big stuff. It's we just kind of take like nice trades. So me personally, I've been trading for a little under a decade. Started trading in 2017 and have progressed. Took me 3 or 4 years to really get rocking and get into my niche. And only recently, maybe in the past 2 or 3 years, have I really been, I guess you'd call it living the trader dream and really pushing forward. I work every day I have a small community with my partner, Dr. V. Dr. Vanessa Charland. She's an amazing, has a doctorate in neuroscience, as well as is like very good at mindfulness and psychology. She's a practicing psychologist. So we focus really heavily on performance more so. You can learn a lot about tickers and charts all over the place, but we focus heavily on performance. So
Yeah,
I
that's awesome.
started, after I started, I actually worked with a previous community and was one of the lead futures traders there for quite a while. And then ended up starting my own thing when that just seemed like the right thing to do. And I've been having a lot of fun with it ever since.
That's great. That's great. It's I mean, that is definitely the trader's journey, right? I mean, I think a lot of people think you can just kind of learn the ins and outs and then go for it, but it takes some years to really, there's so many fine-tune elements to becoming, a consistent, disciplined, profitable trader. It's pretty challenging. So that
100%.
that's I think that's a very realistic kind of timeline you talked about and starting experience. And what did you do before trading? What was the profession?
So I started off actually, I went to college for music education. And I was really looking to be a music teacher and then a performer. And that was a lot of fun, but ended up not being a big bill payer. So I transitioned into IT. I spent a little over a decade in IT, and it was actually quite a good time, but ended up transitioning into trading because one of my children, my daughter, had a heavy autism diagnosis. So having the lifestyle of an IT professional was really not working for needing to be home and be more available for her.
Sure.
So after I kind of sold a small business I had going then and then transitioned over there, and I needed something to do while I was still at home. I think that's why a lot of people, I think there's a lot of like at home moms, for instance, and that I think are really interested in trading because they can still be at home, still do that. And then of course, a lot of people who are retiring or looking for, more flexibility in their schedules. I think that's the big allure. What I think a lot of people miss is just, and you nailed it when you said it, it's the discipline and the other things that come. Those, you can learn to read charts really fast, but actually having the discipline to execute and do the things you're supposed to do with that information, that takes quite a while depending on the individual to get a hold of.
Yeah, absolutely. So how did you develop your trading approach?
So I went the standard route. I think that most people go through. I went through momentum, looking at fast plays, scalping, and methodologies that were supposed to have a really fast and quick return. And there's a lot, one of my missions personally in the market for me is and what we try and do in our community is I'm trying to save new traders, especially from kind of going down the road that I went down, which is this concept that you can come in with a little bit of money and then just make a lot of money in the market. And that's really difficult because a lot of the people that are out there selling the product, that's kind of what they're selling to, but it really kind of takes advantage of a lot of people that are in a really desperate position. They need to make money. And in the market, when you need to make money, it won't give it to you. It only gives it to you when you kind of don't need it. And you just, that's when the market tends to reward you, and it rewards
Sure.
people who don't really need their money, which is really interesting. But for me, my journey was very difficult in the beginning. I blew up my first couple of accounts, just trying to play fast, make money really quickly, and do these things. And then I ended up straying away from that and looking into almost what I would call intraday swing trading, where I'm a day trader pure. I don't hold overnight positions. I've never really been much into swing trading or those other things. I like being liquid every day by the end, but the slower paced moves, actually running wider stops and going for wider targets, is actually where I think it's a lot easier. And I'll show you all a trade that I took today on lean hog futures, which will kind of show that to you. I think you'll all enjoy it, and you'll be like, man, that trade was like watching paint dry, but it worked, right? And that's, so you give up the thrill for the success. And that can be a really hard part because a lot of us really like the thrill. It's a lot of fun.
For sure, for sure. Trading is exciting, it's exhilarating, and that tends to be where things get dangerous, right?
Right.
When it is exciting, and we've all been on that wild ride. For my hedge fund, whenever I'm talking to potential investors in the fund, the bigger the investor, the more money they have. They all have the same question, right? Show me the downside. Show me the risk. Show me the pain points. I don't care about the profit yet. The profit is second,
Mm-hmm.
it's third. Show me what a worst case scenario looks like. And as I talk to the smaller investors that, maybe you're looking at doing kind of our minimum investment, whatever, they tend to say, what's the most amount of money you've made? What's the biggest return you've had in a month? And so on. And I think that's a good reminder for, every trader, new, seasoned, whatever. The big money's always worried about the risk of it and concerned and looking at the risk. And so if you find yourself thinking, how much can I make?
Right.
You've already taken a wrong turn, and you gotta step it back and think about risk first, and then formulate your strategy around that, because trading has losses, it has pain, it has market conditions that are unpredictable. And so
Yeah.
so,
As we
so
say,
it sounds
trading
like
is
you're
uncomfortable. So you better get comfortable with that. Right.
That's right. Be comfortable with the uncomfortable.
Yeah.
So before we look at some charts and kind of dive in on some of that, tell me. So what is your so you mentioned your strategy is kind of an intraday swing, which I've never heard that said, and I actually like it. So I think that's great. So you're kind of on the spectrum of trades. You go for because there's the smaller stops, smaller profit targets. You're in and out quicker, right? You take smaller
Right.
losses and so on, or larger stops. You take fewer losses, but they're bigger and so on. So you're kind of doing that in a condensed time frame.
Right.
It sounds like, and so what's kind of so that's one element of it. So what's the approach to how this works?
So the general allure, right, is profit factor, right? Everyone, if you're risking a certain amount of money, how much money can you make in relation? And we get really hung up in like risk versus reward sometimes. But really all that matters is your profit factor. If you have a little amount of money, this is why swing trading can be so enjoyable, because you can invest a small amount of money, and if you hold for a while, right, you have a chance for a higher profit factor, but you don't get wins every day. You get wins once a week, once a month, once a quarter, right? So once a year, depending on how long you're stuck. And this can be very difficult for swing traders that are newer because they don't have the patience to hold. This is why you see a lot of like short-term traders transition into swing trading after they've been. But you see a lot of swing traders that are newer transition into the shorter term. And it's kind of the same reason. So I've tried to mix those. Like my average hold time is probably more like, can be upwards of like 3 to 4 hours, where most day traders' average hold time is maybe 30 minutes or 45 minutes. So this is kind of why I give it like an intraday swing. I'm trying to basically run as much of the daily ATR as possible in order to get as much, profit factor out of an individual trade as I possibly can. Now, the method switch here that really comes, I think, different with what I do is what my expectation for that really is, right? I'm normally only going for those who speak in the terms of R, which is your risk versus your reward. I'm really only going for like 3 or 4 R a day, where many people are trying to get 8R, 10R, 12R. They're taking numerous trades, trying to get like many hits, many profit out of it. And this is where they end up losing money. It's like the death of 1,000 paper cuts. You just slowly bleed out the winnings you do have, and you never really make enough profit when you win to offset that. So for me, and what I teach a lot of my people is we're just going for 2R, 3R a day. Once you have consistency there, we just up what R means, right? Instead of risking $50, you're risking 500. Instead of risking 500, you're risking 1,000. Right? My average trade entry is around a $2,000 entry, right? So I can, in a 3 or 4 hour session, I'm going to make $8,000, $10,000, right? On a really nice one where I maybe get a little bit more. And that works really nicely. But when you're a small account, you really can't focus in on that because you're never satisfied. My colleague actually she does a newsletter that she puts out for free. It's you guys can have it. It's alchemist.org, marketalchemist.org/newsletter, and you can check it out. It's free, but she gives a science-based, and she was a neurobiologist, so she gives you a science-based approach to a lot of these concepts. And one of the things she highlighted recently, which I really liked, was that we're not satisfied when we have small accounts if we're trading well. Because if you're getting 3 or 4 hours a day, that means you're making $100, $150, $200, and it's like I could be a server at a really nice restaurant and make more money than that. Right. But it's about today's behaviors are going to be tomorrow's outcomes. So if you can get that consistency, then you can scale. And that's the only way to really make money in the market. You have to have money to make money. If you're coming in, people hate this message, and I'm so sorry for everyone who does. But if you come into the market thinking, man, I'm going to risk $50 a day, $100 a day, and I'm going to make $1,000 a day, I'm sorry. That you're going to have to be in like the elite top, like 0.01% of people who have done that. Like, and almost no one has. Even if you read like books like Market Wizards or something like that, you're going to find all of them to make money. The ones that made it with smaller amounts of money did it swing trading, right? The ones that made it on the intraday, like a Lance Bernstein or somebody like that, I mean, they were proprietary traders and had massive amounts of buying power for them to do what they needed to do.
That's interesting. Early on in my trading career, I did some day trading, and I think something interesting to highlight about day trading is that, even though you're holding kind of multiple hours instead of 10, 20, 30 minutes, trading really comes down to the fact that everybody has to find a style that fits them.
Mm-hmm.
You have to, there's never, I mean, I think Kit Kat nailed it, right? Reese's. Was it Reese's? No wrong way to eat a Reese's. I can't remember what the commercial was, but there's there's no wrong or really right approach to the market except for when it comes to risk, right? Managing risk. I mean, that's just, I hate to sound like an insurance agent here, but like that's right. That's what you got to do. And so, for some, day trading was challenging for me. It was always kind of a tough. It wasn't a good fit. Day trading wasn't a good fit for me. But I've had many guests on here that are in your same boat. That it's all about day trading, and they've had a lot of great success for it. So I think everybody listening to this, if you're like, hey, I've tried day trading, there's there's a lot of approaches. There's a lot of things you can do to make that experience better. But you have to find the right fit for your personality. And day trading, there's so many good benefits to it. I mean, if the market is going absolutely ridiculously nuts, you're not having to sit through that necessarily. You can
Hmm.
skip a day, right? You don't care how the market opens in the morning. And all my positions, although we're equities, options, basically, uh, um, and we're very protected, but still, I'm curious how the market's going to open the next day. And I do like that part of day trading where you're not going to bed worried about things. What's going to happen overnight. So
Absolutely.
that's great. And then so you said you like futures, you get a little more bang for your buck. Futures are a lot of leverage. Have you What have been kind of your challenges with all that leverage? I mean, was it a little bit of getting used to in the beginning,
Yeah,
kind of figuring out how the gas pedal works there?
for sure. So, what is the old saying? With great power comes great responsibility.
That's right.
So trading intraday or being a day trader has one major disadvantage, which is it's really fast, right? Like when you're doing like investing and longer term entry, you can use fundamentals. You can really look at the company and say, because I like this company or because I like this dividend, even if it goes down, who cares, right? It's still paying me a certain percentage of whatever I stuck in it. So it really changes things when you're being a speculative day trader. Those elements help, right? They'll put you in the right flow, right? Okay, well, this ticker's, people really want it, so the momentum's going to be better to the upside. So I'm gonna buy when I have chances to buy, sure. But also in day trading, you're often fading what is otherwise directional behavior. So it's been going up for 2 or 3 days, so now you're going to play the mean reversion back in so that others have a chance to buy on the long term. You're going to play that shorter term move. And that makes day trading very difficult because your timing in day trading is everything. So I put out a book in 2021, a complete day trading system. And I break it down into three principal sections: where, when, and how. Right. And when you're in day trading, you have to have those, which is where you're going to get in, when you're going to get in, and then how you manage it. And the when is the really, really hard part because a lot of, if you're, patterning, I really don't believe in pattern trading. As I've gone through and looked at it, I just think it's like a Rorschach test. I think we're all really excited. We see a double bottom or a double top or a ABCD or something like that. Sure. But patterns, if they're not applied to the right location, they don't have a where, then you're going to get beat up trying to use them. And this is where most day traders fail. They start off pattern trading. They're looking for a cup and handle. They're looking for an abandoned baby. There's more, a mountain pass. There's more names for patterns than there probably are even patterns. So people get stuck really bad and they don't know why they're getting beat up so much, and it's because you're not paying attention to the higher time frame. You're not looking for levels that are important to actually buy and sell off of and apply your pattern to that, which gives you your higher attempt. So I really think with day trading, it's really important that you have a very well critiqued system. And then also, because of day trading, it's so fast, it's very easy to be traumatized as a day trader. You're going
Sure.
to take, your losses are going to stack up really fast and your wins need to offset those. So if you have behavioral slippage issues, right? So it's like, okay, well, I got stopped out 3 times and now I'm going to cut my winner early. You're going to never get to profit. So it's a difficult profession to really get into until you can build the thick enough skin to really to handle. Okay, well, I just took 3 losses. Now I got to hold this winner all the way for the whole move, even though it's pulling back against me right now. Like I have to stay in it because if I don't, I'm just not going to make the profit I need to be profitable. And that's really tricky. Where especially in investing or swinging, it's a lot easier to tolerate some of that because you've got fundamental behavior behind you. Okay, I get it's coming back, but this is a good company. Like it's doing, this is really nice. It's got strong fundamentals. Its projections look amazing. Like this, people are going to want to buy this, so I'm gonna hold on to it, and that makes things a lot easier when you're doing that.
Yeah, for sure. I'd love to see. You said you took a trade today that went well? Let's have a look at it.
Yeah, let's take a look at it. Hold on. Let's see. This is should be my screen one. Let's see if this works without sharing everything other than what I want to show you. Yeah, there we go. So this is a trade that I took today. So I use a platform called TradingView, which many of you may or may not be familiar with. It's a pretty solid platform. What I really like about TradingView is it's actually relatively low cost, and you also have the flexibility to code your own indicators. So we have coded with the help of one of my partners. His name is Dr. Victor Bruz. We just call him Bruz. We coded out my system that's from my book into TradingView. So what happens here is we opened up, and this is Lean Hog Futures. Lean Hog Futures is a very interesting future. It has a really weird time frame. It doesn't open till 9:30, which, I mean, it has no session prior to 9:30. It actually closes early. It closes around 2:30. So it's not like your traditional time frames you get to play. So you got to be aware of that when you're messing with it, or else you end up swinging something by accident, which may be a good thing. You never know.
Yeah, for
Uh,
sure.
so when we opened, now we use this in combination with a lot of statistics. My partner, Dr. V, she is an amazing statistician. So she goes through massive amounts of market data. She goes through all the big like websites that are producing like ES and NQ data. She writes correlative reports for our community and posts those out. It's just really cool stuff. So we've tweaked and highlighted these indicators, and so like I'll basically like let me kind of walk through what a trade for me looks like, and I'll maybe even explain some of the indicators I'm using. So this is Lean Hog Futures. So when Lean Hog Futures opened, the first thing that I wanted to do is I actually wanted to sweep down into the level. So before I buy something, it's really important to me that it makes a directional sell. If it goes up first before it goes down, stats show the likelihood of that being a good buy to be significantly lower. If it has to go up and find ask before it comes down to bid, this is distributionary behavior, right? So we don't want it to do that. We want it to come down and find a bid, which kind of shows us that they're offering it for a nice price. They're going to go down and hit a bid. So as we come down and we hit this level, and I use the equation that I use is a Camarilla pivot equation. It's my own version of it. But it's broaderly based on like the Nick Scott from the 1990s is equation that he put out. It's just got some tweaks to it on the time frames to make it work a little bit better for intraday trading. But it comes down and it offers, once it hits the line in the appropriate sweeping action, it calls the trade. So this box here gets drawn by my system. And then I use this indicator down here, which is what we call the buying and selling detector, or the BS detector. Actually, an invention of mine, which I'm really proud of it. Actually, it's using a concept of basically volume weighted tick. So it's looking at the amount of selling we have. Is it a lot of selling? Because if it's selling too much, I don't want to buy it. So this kind of comes into the win. As we come down here and bottom out, I notice that we're actually mid-level, if not buying a little bit on this ticker, even though it looks visually like we're selling. The way we're weighing the candles here does not make this look like we're selling very well, which is what we would expect if we were offering lower on lower volume for a buy. So once it hits that and the volume looks good, I enter. My stop goes here, my stop goes below the box, and my target's up here at H3. So this play is called an L3 to H3, and it's a traversal play. So it's just running the range, right? So, and we get about $1.63 on the ATR out of this, and I ran slightly right around $1 on this move. So I got about 2/3 of the day's ATR on this one, which was really nice, and we'll take it. I did take 13 contracts, so this puts this at a little under $2,000 risk. And then I got filled when it hit the level, which was at about maybe a 3-to-1 on my risk. So again, not major thing, but when you're risking $2,000, $6,000, right? And if you're averaging $6,000 a day for most of us in retailing, that's not a bad place to be, right?
Yeah,
So
for sure.
you can do pretty well on the yearly with that being your average daily reward. So it worked out really well, and we got this. So it's multiple indicators, and then on this one, here's my 30-minute chart. we actually use this indicator that we've also, every indicator that I'm using on is all ones that we've coded in. So this one's an initial balance indicator. And for those of you who are looking for simple trading that's science backed, initial balance is beautiful. So in this instance, we have a wide IB range. So from our open, that first hour, that range is what we call it normal. It's pretty wide. So the expectation here is that we're going to traverse back across the range. If it was narrow, I wouldn't like this play nearly as much, because on narrow IBs, we're more likely to extend afterwards. So this really worked out nicely, kind of just having everything we were looking for. So we were in a buying range for the month. It's pretty low in the month. This is a daily chart. So you can see we're down here on our month. We're quite low. So it's a good spot to look for a buy. We offered a buying area on the intraday with the appropriate movement. And our IB said, hey, we've got good potential for this thing to run. And actually, I mean, our highest ATR high is right here. So there is a chance by the end of the day, we likely make it up all the way to where its ATR high is, which would have been, I mean, if I'd have held for that, that would be a bottom tick and a top tick, which happens sometimes. But for me, I'm not really interested in like the whole move, the big move, the yay, look at me, I'm going to post this on Twitter, or X now. I'm going to post it on a thing and do all that. It's like, I just want to make money,
Yeah.
So once we get the nice move in, that's it. But yeah, that's my trade today. Only trade I took today was one trade, and it was on HE because it called.
That's great. That's great. How does how do you look at like your win loss ratio? What's a common string of losses? I mean, is this 2, 3, 5, 10 consecutive losses, and how does that whole thing play out?
So it really depends on the market itself. Like when the market is moving a little bit more and there's more volume in the market, it's much less likely we're going to take a string of losses. I'd say on average, probably about 2 or 3 losses to every one win when it's bad. Last week and the week prior, and so far, thanks to this one, the start of this week, I ran a very high hit rate. I'm probably running somewhere in the 80% range. So I'm probably having 3 winners to every one loser, which is really nice. But the system itself accounts for a whole lot of that. I spent many years developing this system. I think we've got just the calling system that's been programmed probably has close to 6,000 hours into the programming itself. And then, I mean, I've been using the same trading system every single day since 21 with very little adjustment, just some refinement here and there. So it performs really well on the intraday as long as you have the patience to wait for it to use. That's like, yes, actually on, what was it, Friday, I was traveling and I was focused on ES, and it didn't. And this just gotta show you, I'm not perfect. Like nobody's perfect. And even with my own system, it stinks sometimes. But it's Friday. I'm at the airport. I'm trading with my community. I'm having trouble finding a power outlet. Like I'm kind of all over the place. And then I start looking at ES futures, and it's in the right range, but it didn't have the right sweep. It opened too high and it came down into range. And that automatically is supposed to kill the play for me. But for some reason, I was hyper focused on it. At the same time, gold called for a breakout play. And I'm just stuck on ES, just trying to make it work. I didn't lose money on it, but I didn't really make money either. I think I made like $100 between both of my I took a little stop, a little win, and I was just kind of done for the day. And then I looked back at gold, and fortunately, many members in my community caught it, and they're like, "What were you thinking?" And I was like, "Hey, don't give me a hard time here." But I'm glad they did. They keep me honest. But the gold call was beautiful, and if I had just focused on my system and just focused on the calls, I would have had a really great day Friday while I was traveling. But but this is what happens with many traders. It happens to all traders, even seasoned ones, but especially to newer ones. You even when you put a system together, you don't really have like the faith in it or the faith in yourself to just really do what you should do. So there's all this constant overthinking going on. And then that just creates a scenario in which you either overtrade or you undertrade rather than just doing what you should be doing. But it happens to all of us, which is, someday I would like to be beyond that, but I don't think it's possible. I think we're too human for it.
I know. I think the human nature side of it certainly makes it tricky, but that's super cool. And you said you on this you're kind of focused index futures, metals, obviously some commodities, some hogs and
Yeah, you can see
grain.
my regular watch list over on the side. So these are the major futures that I'm tracking. So I like metals a lot. They perform quite well. The index futures, of course, and then some commodities. Like, I mean, crude's a really nice player. It does pretty well. A hog is just one of those ones. It's one of those ones no one has on their watch list, but I mean, it works great. So I mean, we got gas, or heating oil, natural gas, soybean, and then micro Bitcoin or Bitcoin futures. So which those have been a little bit in play lately, although not so much for me. But and then as far as like stocks that I like to watch, I basically just watch the Mag 7 plus whatever's like in the news lately. It's pretty good calls that can come on that. We have, last week was a really nice week for our equity calls. So this week we haven't, just to start off, we didn't have too many good ones today. But the system was actually designed around equities, so it works really well with equities. And then I have some of my folks who trade options, but they're using this, and then they're pairing it with like open interest for some, or for instance, at a specific level, or they're looking for tickers that have high gamma, and then pairing that with certain levels, and it works out really well for them.
That's great. That's great. How much in kind of your shorter term outlook here? How much are you looking at kind of broad markets and what they're doing? And do you think much about the how you think the market might finish this year, or is that not so applicable to your strategy?
I mean, the thing that I think is the big deal, like, so it would seem that the market is not very interested in going down. There's, I'm trying to remember whose book it was that said this. It was talking about swing trading mostly, but the easiest way to tell which direction the market wants to go is look at the news. And whenever the market doesn't react to one type and it reacts to the other type, that's going to give you your answer. So anytime good news comes out, we rally. Anytime bad news comes out, we don't do anything. Right. So it really shows you that in general, the market is quite on a bullish lean and has been on a bullish lean for quite a long time. Now, I think there's a lot of implications behind why that is. I think AI, especially in the tech sector, continues to be a driver. And I think people have a lot of interest in that as a ticket item. NVIDIA, for instance, earnings is coming up. I think it's Wednesday. NVIDIA's earnings came out. They just got an upgrade in their price, right, for another $100 speculatively on top of where they are. And they have earnings coming out. So I think we're really focused on tech and just really realizing a lot of these big tech companies, they're doing great and their projections are pretty good. So until something really shakes the market up, why do anything else? I think crude adds a lot of volatility in the market, especially with all the overseas stuff. Is there peace? Is there not peace? Do we have a deal? Is the strait open? Is it not open? I think
Yeah.
this does, but you'll notice when we get the bad news, we really don't drop, right? The market doesn't sell off. Even when fuel costs, like the fuel costs have gone back up recently, right? I think we've put on like $15 or $20 worth of price in crude in just the past few months, but the market has not sold off. And normally when crude rallies, the market sells off. So it's like, well, because, especially like Dow Jones Industrial, I mean, it's a giant industrial nexus that's, they use a lot of fuel, they don't care. Right. So it just seems like this market right now is quite, the mob itself is quite convinced that this is a good market to be invested in and stay invested in. So it'll be interesting to see when that changes, if that changes anytime in the near future. I mean, I feel like our market's pretty engineered to go up. It's what it was designed to do. So it's going to take
Yeah.
a real big shaker to make, we could be waiting for the next election cycle before we really see something that makes this market decide what it wants to do or not wants to do. And that's a long wait still. I think we still have a couple years left.
Yeah. Yeah. Interesting. Interesting. Well, that's great stuff. It's good to see your strategy and how you look at these markets. Tell my listeners and viewers and so on where they can find out more. You said the
Yep.
marketalchemist.org.
Yep, yep. I co-founded the Market Alchemist with my partner, Dr. V, in a real endeavor to kind of change the landscape of retail trading. We want to save traders. That's our main goal. Like we want to save your wallets. We want to save your mentality. Like we're not here to like to get you to go in and go big and do all these things. We're preaching the long game on this, and we really want to do that because a lot of the market out there, for those of you who are retail traders, it is a pump and dump concept. They are out here. A lot of the people who are preaching market involvement, they are very bolsterous. They have a lot of just really big things to say, but when you look at it, they're really not making a lot of money. Or if they are making a lot of money, they have a giant account that they're doing it with. You know, they've got just massive amounts of money, and it's a different game for you than it is for them. If you've got, $8 million, you can make 5 grand, 10 grand a day pretty easy, right? You can have like two losers have one winner put you up like a 0.5%, and you're just crushing, right? But if you've got 30 grand or 40 grand and you want to make $1,000, you're talking about one heck of an ROI, right? I mean, you're going to be buying in, and and there's very few markets where I think people are going to reasonably be able to boast, oh yeah, come work with me every month. You're going to make like 400% or something like that. It's sign me up.
Yeah,
I
sure.
like take my money, if that's the case. So we kind of are in the middle ground. We want to create good, strong behavior so that you can do that. So if you want to like get in touch with us or learn more, it's marketalchemist.org. Like you said, we have our indicator set that's there. We offer our free newsletter that's there. And then you can always work with me and my partner, which is always a really, for retail traders, I think is a really great thing to offer. Kind of like, if you're really going to want to be good at a sport, you get a personal trainer. So there's so many people out there that are trying to just bundle information off of YouTube and shove it
Yeah.
all together. And it's really confusing. And there's a lot of misinformation out there you have to filter through. So come hang out with people that already filtered through it. And we did it through experience. You know what I mean? It wasn't easy. I don't have some grand secret. I got beat up a lot in the market in the beginning. So and now the market is being much kinder to me, but not really the market. I'm just staying out of its way and just doing what it's showing me that needs to be done that day.
That's great. That's great. I think that's all very timely advice and really good reminders for everyone trying to make a go at the market. And
Hmm.
so that's really cool. Well, thanks for sharing your approach and your outlook. It's super interesting. And I think definitely there will be some interest in this type of strategy. So that's really cool. So thanks for talking about it. We'll make sure to include those links with this episode,
Yep.
and we'll stay in
Yep.
touch and hopefully have you on again in the future.
Yeah, of course. You can throw my socials in there if you want. If you want to see me on IG, I'm at Thor Young MA, or if you want to find me on the X at Thor Young. I'm not very creative with my naming. So come find me out there. But Jared, man, really appreciate a chance to be on with you and and talk with your people. So I appreciate it. And if you need anything else from me, just let me know. I'm happy to come around and chat.
Will do. Thanks so much for being on. Appreciate it.
Appreciate you. Have a great one. Thank you, everybody.